by Anish Damania, the MD and CEO of Institutional Equities at JM Financial Institutional Securities, to discuss the market fundamentals and a lot more. Anish, good morning. Thanks a lot for joining in. I'd like to start off with oil marketing companies since we were on that subject. There has been plenty of divergent opinion on the prospects of these companies. Now that the crude prices are also going higher, which side of the fence do you find yourselves on?
So, as a house, we believe that in terms of the oil marketing companies, the best of the year has gone past them, and if we normalize the year, then the stocks trade very expensive versus their average earlier, and still, we see this uncertainty on the oil prices. So we feel that at this current time, these stocks are fairly valued.
Anish, morning, Reema here. We'll get to the capital markets, you're the head of ECM2 in just a bit. But since we're on the subject of oil marketing companies, as a house, where is it that you're most bullish on over the next 2 to 3 years? Because stock markets tend to front run the good news and price in the good news well in advance. And we've seen that happen. So where is the risk reward? Where are you most confident about to make money from here?
I think if you ask me about the oil and
Not
gas
oil and market. I'm
companies,
saying just to get the market view out, market view in place first. So as a sector,
okay.
as other sectors.
So from our perspective, we bet a lot more on ONGC than the oil marketing companies at this point of time. We also bet on the gas companies and companies like Petronet LNG and Indraprastha Gas. We feel that those stocks offer a lot more value, and at this point of time, we feel that the OMCs are fairly priced. I think this is a view which we have at this current moment of time. But if, let's say, oil prices continue to stay in the $70 to $80 band, maybe there could be some tweaks which we might have on that view.
And the other sectors which you like?
Yeah, so overall, if I look at the market, then we are very positive on banks, the entire manufacturing sector. I think there's a need to look at the consumer staples. There has been a long underperformance of that sector. Over the last 2 years, incomes at the lower and the mid strata of the society has been not that great, and which is reflected in the kind of consumption patterns which we have seen. But we feel that we probably are scratching that bottom, and there could be this bottoming out phenomena. This could be a good time to look at the FMCG companies as well.
What about IT, Anish? The street has not taken very well post TCS's results, although the management commentary was fairly okay. They said FY25 would be a better year than FY24. Deal wins were at a record, but then there is still this near-term lingering uncertainty over what's going to happen in North America, in the US, and the street is almost on the edge now when it comes to Infosys' results as well. Where is it large cap IT or is it mid cap IT? Do you find value there, or do you find even value at all in this sector?
I think there is value emerging in the large cap IT space, especially the IT services companies. There has been a lull in the consumption, the spends which which the end customers have done, and probably that could continue for another few months. We feel that there is just a postponement of that trend. And at this current point of time, we are not that positive on an Infosys or a TCS, but definitely in the mid cap space, we feel that since their growth is structurally looking at 14 to 15%, which is almost 3 times the growth rate of the large companies, and given the very large weights, we have a 14 to 15% weight in the index for IT, and most of it is dominated by the large services companies. And we feel that the alpha generation is happening in the mid cap companies, and that will continue. So in the IT space, if you continue to ask me to bet on, I think the mid-cap IT companies will continue to do well. And as long as there could be supply in that supply can get easily absorbed in those names. So overall, at this point of time, we are neutralish on this sector. We feel that the stocks have come off and they have kind of taken into cognizance the fact that there is a lull in the market. So there is some bit of expectation that this lull will continue. We believe that this might continue for another 2-3 quarters. We need to revisit this view now. And we feel that this could be a time where we can look at it. But at this point of time, we are still looking at how to position the large cap IT companies. At this point of time, we are still negative on that.
Okay. Anish, and what's your expectation from the capital markets in terms of M&A, QIP? India has become a magnet for inflows. So what's happening on that front?
So just if you look at FY24, we had about 2 lakh crores coming from both FIIs and DIIs each. We had about 1 lakh crores coming from PMS, AIFs, etc. So about 5 lakh crores. Add to that, the family offices are also added to this bit, and also retail. On the supply side, if you see, we had IPOs and QIPs together about 1,50,000 crores. We had blocks which the Ps and some of the corporates sold down of about $20 billion, or another 150,000 crores there. And you had OFS from the government and others about 25,000 odd crores. So a supply of about 3,25,000 crores, and money was about 5 lakh crores. So you can imagine that 1,70,000 crores, which went into the secondary market, caused a 28% rise in the Nifty. I think this scenario is not changing. So despite the seemingly large supply of paper, which could be both, I think the QIP will accelerate this year. We think the QIP amounts could be 3 times of what was raised last year. And IPOs will continue to raise about 75 to 1 lakh crores, 75,000 to 1 lakh crores. I think even despite this, we feel that the inflow of money will be higher than the supply of this paper, and this will keep the markets buoyant.
That is some number, 75,000 to a lakh crore in the IPOs in this financial year, as if the last financial year was not enough to go by in terms of numbers. But pleasure speaking to you as always, Anish. Thanks a lot for sparing time and joining us this morning. That was Anish Damania there from GM Financials. Time for a short break here on Trading Hour. When we return,